Well, hello folks, I'm LA Little and this is your weekly NeoTA Wrap. Where we take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves just the one question: what happened last week? What does it tell us about the coming ones? I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. If you subscribe, then anytime I push content, whether it be these weekly shows, the daily shows, the morning shows, they all show up there. You get notified, and you can stay up with what's going on in these turbulent and sometimes dangerous markets. As far as what happened last week, we got a little bit of a bounce after a big decline, still negative on the year other than the NASDAQ now. 2% gain in the NASDAQ puts it back into the plus column. Overall, still down. Bounce. What does it mean, right? I mean, that's the question. It's always the question. What do we go from here? Let's take a look at the charts. Let's start with the S&P. We'll start on the daily chart to get some flavor of what just transpired. And what we're talking about is the break of this range that was up here, right? That break, that range break, when it broke with force and gave it a huge run to the downside. 13% off the top up here to the bottom. Pretty big move in the S&P, and it was all compressed in 5 days. I mean, we were only 2% off the top here when it started. 11% straight down, straight away. That's going to lead to a bounce. It does lead to a bounce. We have the bounce underway now. Now the question is, where does it take us? Right now, in neoclassical, you're always looking, when you get these breaks, you're always looking at your retest regenerate zones on the way back up. And if we look at them here, and we're looking within 60 bars now, right? So we're always about 60 bars on a chart. The question is where does this bounce to on this time frame given what's visible? This is the swing point low we're looking at. That's where it wants to try and get to. That's 2042 roughly on the way back up. So that's the S&P. That's the way it looks, and that's what we should be looking at on the way back up. But to be clear, it doesn't mean that we have to go straight there. In other words, it could be a circumvented route, and probably will be on the way there. In other words, you get the big push down, you get some sort of a bounce, maybe you get a little ABCD structure that takes you up there, right? The odds of it just going straight up are not that great. Yeah, it's possible in this market, but that's not the high probability case. The more high probability is you come back, then you bounce back up, and then you get up in there and try to test into that area. If we think about that bounce and think about the retrace off of it, where's the likely area that it should find some buying support on the way back down? And the obvious place is this little congruent area here where all the price points have coagulated at this particular point in time. Now, if you look at this on a weekly standpoint, here you get a much better feel of what just took place. Right? Remember, we had that range. That range had been in place for quite a period of time. And that range projected, if it were a break, projected down to about there, just underneath these swing point lows. Well, when it broke, not only did it break those, it kept going, right? And then you projected on down another, equidistant type area. And that takes you down deep into this October bar. We got deep into the bar, but we came straight back out of it and did a hammer reversal, even though we did it on volume. So when you compare the volumes here with the volumes over here, right, you had heavier volume. So you're banging into those October, or into that October bar with higher volume. That's one thing you have to note, because that says, hey, if you can do that, then they were willing, the sellers were willing to just sell at any price. And if they were willing to sell at any price before, they may be willing to sell at any price again. And so that's something to take note of and to recognize that that's certainly a possibility. Now, getting back to the bounce thing, if we come back up and we look at the bounce, right, the bounce is back up to where that retest regenerate zone starts. It's on this swing point low on the weekly time frame. That also doubles as the swing point low on the daily time frame. And so as it comes back into that area, that's the critical area, about 2045. And so as we move back up, it's another 50 points up from here. As we move back up, that will be the critical area. Now, on the way back down, the critical area is going to be, underneath, well, I can't show it on this chart, but underneath that little area we were just talking about, which is about in here, where, actually it's a little bit lower, it's about in there where the 2 or 3 bars, let's just bring the daily back over right quick, is those 2 or 3 bars that matched up. That price point's 1942. So now we can go back to the weekly. Yeah, it's right in that area. So that's the critical area. If it were to get back into the October lows, right, then I would view that much more pessimistically in the retrospect, right, because that says, hey, this thing really shouldn't come that low. It is coming that low. When it does something it shouldn't do, that's something you have to raise your eyebrows and ask yourself what the heck's going on. Before we leave here on the S&P chart, let's look at the long-term time frame, right? We've talked about this before, but I want to bring it up again. The first thing to note is as you came into the October bar, you didn't have as much volume. So that says, at least on a long-term time frame, this doesn't look like it has the kind of volume needed to blow this thing out. That price point low is 1820. We got down to 1867, so we're about 47 away from it. That's not that far, especially given that we took 200 off in 5 days. So can it break this out? Well, sure, it's possible, right? Is it going to happen right now? Probably not. We're getting a bounce. We're already, we're 100 points off that area already. That is a critical area going forward, though, right? It is something you want to put on your roadmap. And if we do start coming back down, a break of these 2 swing point lows would turn this market from bullish to bearish that quickly. And then you could get a more significant retrace. So that's, long term, that's something to have on your radar map and to continue to monitor. Now, if we look at some of the stronger indexes, in particular the NASDAQ, right, which is coming back up and it's almost at that retest, regenerate. Matter of fact, if we pull over to the NDX itself, right, the NDX is almost there. High here, 43.40. That low over here was 43.44. So we're within 4 points of testing into that bearish retest, regenerate, and it certainly looks like it has a good chance of doing that Monday morning. Now, of course, that's going to depend on other factors like what happens overseas overnight, and then also, of course, how do people interpret all the news out of the Fed Jackson Hole this weekend, where we were told a couple things. One, we may or may not move in September. Oh man, that's new news, right? We've been talking about that. We've been talking about that for 2 years. Maybe it wasn't September, it was other dates at the time. And now we have another criterion that says, hey, we're not going to move if the markets are volatile. I love the way they keep putting new conditions on when they are and aren't going to move. But anyway, that's what they told us this weekend. It's like, with volatility in the markets, it's not generally a good time for the Fed to move. Well, duh, I guess not, right? So anyway, that's the Fed. Whether, the fact that they left the rate hike potential on the table for September probably won't play well. The fact that they gave this new condition probably does play well. So how does that play in the futures overnight? I don't know. I know we're extended on the way back up already. So you bungee jump down, right? And then bungee bounce back up. So straight down move, straight back up move. You would expect some sort of a, this type of stuff to take place inside the bungee. And so that's kind of how you have to view this thing. Just make it simple, folks. Doesn't mean it will happen, but as you come back to an area that you should see sellers, I suspect you will see sellers, and then we'll see what really wants to happen. For the better part of the year now, I've been focused a lot more overseas than at home, and the reason for that is because the overseas has mattered more. I've talked about over there versus over here, moving these markets, and this whole decline that we saw in the U.S. markets really was preceded by what was taking place in overseas markets. They started a week earlier than us. This is the CAX. I'm using one of the strongest indexes in Eurozone. That week of August 10th, then of course last week, and then the week before, and then last week, those were the big declines. 3 straight weeks on the downside. By contrast, if you look at our market, it didn't do it, right? 2 weeks. The week before that, it held up. So a big difference in the way these markets are playing out. Overseas leading domestic markets up and leading them down, especially on the way down. Let's move over to Asian markets, where the real turmoil is being felt and is coming. Here's the Hong Kong, right? Hang Seng, fairly stable index considering that it's in Asia. This market has been in a free fall now since, what is this? The top was July. So basically 6 weeks, even more. July, this is August, that's not July, that is, I looked at it wrong, May. That was before June, right? So it's basically 10 weeks straight down. Shanghai, same thing. Not quite as far back, but when they did break loose, which was June, all hell broke loose and they really moved to the downside, 30-something%, almost 35% or so. These markets are the ones that are leading us down. Shanghai and China in particular, because China, currency issues, they're trying to deal with a devaluation that needs to take place on the renminbi, and at the same time they're trying not to let it go too far too fast. But the fact that they're having to intervene in those markets is actually, lessening the effects of what they're trying to do to stimulate their economies. And we know that their economy is not doing that well. We see that from the data that we do get. And if you go to some of these other numbers that others put together, they're actually showing China maybe is already in a recession. Same idea. Here's Taipei, same thing. Taipei was, back in April, telling us something was wrong. Remember Taipei made that big move up that we looked at the time, and then they took it all away right away? And we thought, wow, that was odd. Well, not only was it odd, it was a precursor to what was coming, and we got a big decline off of that as a result. So the bottom line here is that we're not going to see stability until stability comes to Asia. And that, so far, isn't in the cards. There is some big bounces taking place here, but now across Asia we've left volume at the bottom. And this whole question of volume off the bottom, off the top, things of that nature is a viewer question for this week, so let's take that right quick.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Now, as we come back here from that short message, I want to take some viewer questions. There's a couple here that have to do with volume and magnet bars. And the first question is should this August 2015, and I assume that the viewer is asking about this particular bar, be viewed as volume off the top and indicating potential trend transition? And the question is, or is there too many bars already occurred between this and the high of May 2015? And so the point is, there was a high here, and now you get this big move down. Well, there's two things. One, you point out, and that is that there's a lot of bars in between, so it doesn't mean as much. And so no, that's not volume off the top. And B, you really didn't get volume escalation off the top. So in other words, you can see the volume here escalating compared to comparative volume, whereas last week when it really started down, it wasn't any volume, right? So no, it's not really volume off the top with respect to that. The second question is one that's kind of interesting, and that is that, you know, I've talked about in my second book, actually, I talked about magnet bars. And this was a magnet bar. And that was the question, is that a magnet bar? And yes, it was. And why is it, what makes it a magnet bar? What makes it a magnet bar is the fact that it's significant. And by significant, what we're saying is that there was something that took place here that was out of the ordinary. One, volume expanded pretty well. Two, you had a huge wide price spread on the way down to that bar, and it reversed up, right, making this a big wide price spread heavy volume bar. When you get a situation like that, right, and there's no resolution to it, in other words, prices never came back down here to test this area. They just shot straight back up. That leaves volume at the lows. That, to me, becomes a magnet bar, and at some point is going to attract prices back to it. Well, lo and behold, here we are 10 months later, and what happens? Boom, you come back down there and you bang into that thing and you test into it. It magnetizes prices lower to it. That was the whole ideal of magnet bars and the discussion around them in that book. Now the viewer question here is, okay, does that kind of invalidate that bar? Well, no, because it's still in play. I mean, it's still a bar. It's not quote unquote the magnet bar anymore, because the magnet bar now has shifted. It's here. This is a magnet bar now, because you have the same situation, right? You have the big push down, right? Huge wide price spread on the way down and big volume coming out of it, and there's no test of it yet. Assuming no test takes place, that thing's going to be a magnet somewhere down the road, right? When prices get out here somewhere, it's going to be the magnet. Anytime you get close to it, you're going to try to get into it, right? And so that is what a magnet bar is, and that's kind of hopefully a decent explanation of what we're talking about. So there are a couple more questions, but I'll leave those and try to pick those up on coming shows. If you have questions, of course, just write in. You can find where to reach me, here on NeoTA TV. Just pop in here and bring this over so you can see it. You just pop down here, and there's some emails and so forth that you can go to. So as we come to the end of the show, I always try to give you my feel as to what's going on, where we're going, what's happening. But today I'm going to do something slightly different. I've already kind of showed you, the bounce scenario, how that's probably playing out, and how we're going to try to get up and retest, regen, and then potentially we'll find out whether this top is really in on this market or not. But it's really about, how do you manage risk? How do you mitigate risk? If you come over here and hit search, and I've already pulled it up for you here, and I typed in 3 steps on the search button. And there was an article that I wrote October last year when we were in the midst of that decline. 3 steps to staying on the right side of the market. And if you pop into this article, there's kind of a risk mitigation and so forth that talks about how it works. And then there's these steps that you should be following with respect to how to deal with the risk in a market like this. I would highly encourage you to take a look at this. As a matter of fact, I'll probably try to move this article to the front page over here on the right side of the front page. If I pull this over for you into this your resources, because I think it's a good resource and a valuable thing that you could use to help you, not only now but in the future in terms of risk mitigation and how you deal with this market. But you don't want to wait and then make the market force you to do something, right? And anything you do in life, whether it's trading the market, selling your home, whatever it is, there's a point where you want to sell something on your own terms. You don't want to sell it on someone else's terms, because if you're selling on someone else's terms, in other words, maybe you don't have the cash flow to support the living in the house that you're in, and you're going to have to sell it, right? Or you're going to have to take less for it because you have to get out. You don't want to be in a position where somebody else dictates what you do. It's no different in the market. You want to be preemptive because the market has structure and because we can tell what that structure is, and I show it to you daily, right? We make decisions based on the structure. You know, if you just go back, you know, I talked about the mini crash and an opportunity. That structure, you know, it played out. But this was the one I was going to show you, right, where is it out? Here, stock market technicals suggest a breakdance lower. A week before the market gave it up, I specifically talked about the structure that was in place for a good 5-6 months now. Looked as if it was imminent to break down. That's what I said in that article. That was the key for me and should have been for you to move to higher ground, right? Avoid the flood, move to higher ground, take preemptive action before you're forced to. If you do that, then you can start thinking about, you know, the opportunity in energy stocks, or you can think about, you know, the opportunity in other stocks in this market as the market drops. It puts it in a whole different mindset. That's what I've been telling members, trying to help members do. It's what I'm saying this for you, whether you did it this time or not. Think about it in different terms. Change the way you do business to take advantage of the strengths that you possess. You're a small trader. You have the ability to go to cash in an instant, whereas a mutual fund or a large investor can't. They have too much inventory. They can't just push it out in a day. It takes them weeks, months. That's why market tops are quote-unquote distribution patterns. You know, when you look at the S&P here and you look at the daily chart, right, that's what was happening here. They were slowly holding this thing up, pushing stock out, getting rid of it. It isn't a coincidence that this thing, you know, traded sideways for an extended period of time. It was the large operators slowly getting rid of stock, lessening their risk, you know, mitigating their risk factor in front of what turned out to be a larger decline. Now, that may have been something shorter term. It may be something bigger term. In other words, if we take and pull up the weekly chart here, right, this whole thing may be some sort of a distribution before we actually get a larger move to the downside, even larger than what we've already seen. We don't know that, but we can tell the structure. If we can tell the structure, we know the potential, we know the probabilities, and knowing that, we can mitigate our risk and therefore put ourselves in a position to do better. Hopefully that makes sense. If it doesn't, I'm not sure what else to say. You know, maybe you should be a member of the site where I'm teaching this all the time and trying to help you learn how to fish and take care of yourself. Don't depend on the opinions of others. I thank you for your time. I hope I can help you and have helped you and continue to help you. Have yourself a great week. It's going to be a volatile week. I expect you're going to see that retrace off that first move up now probably kick in this week, probably be bought as it comes back, and set us up into some sort of an attempt to push higher into the Fed meeting is the way it's trying to set up here. And then that will be the litmus test. Have yourself a great night. Take care. I'll see you next time.